As consumers deal with inflation and other economic setbacks, spending in advertising has taken a hit. And with so much economic uncertainty, our next guest says visibility into trends is, quote, limited as advertisers remain cautious. S&P Global Ratings U.S. Media and Telecom Senior Director Naveen Sarma joins us now. Good to have you on the show here. So I want to first talk about this economic predictor that advertising has become as they really get closer and closer to the time when they sort of put in their advertising bids to when they actually make air and what that's actually signifying.
Yeah, it's actually a fascinating trend that's happened that's really accelerated with the growth of digital, because so much of digital is being sold programmatically. It's being bought closer and closer to airtime. We've seen that in the past with things like radio, which has been sold close to airtime. Television has always had a bit of a lag, but you're starting to see television as well get sold closer to airtime as more of that is being sold programmatically or being sold through streaming services. So the idea that historically advertising was a lagging indicator of economic activity is no longer the case. It's getting to be, on par with economic activity. What we saw last year was both radio and digital started to show significant weakness towards the end of the first quarter, as we started to consider a potential recession or at least a macroeconomic slowdown last year.
What type of recession is advertising dollars predicting right now?
It's kind of unsure. So right now, our assumption, we base our forecasts off of our macroeconomic forecast, which is still assuming a bit of a growth this year, and that's a change from what we previously had. And so what we did was we went and changed and actually slightly raised our forecast because we don't think it's going to be as much of a recession this year. But frankly, the lack of visibility into what's going to happen in the second half of this year is a bit of a concern because a recession could be worse, could be better, and advertisers are going to react very closely to what consumers are telling them.
So then, how strategic are advertisers having to be right now when they're making the most of their ad dollars? Where are they flowing that money into?
Yeah, it's a great question. I think you're seeing a pullback on digital, which is really transaction oriented or brand building. More importantly, you're seeing pullback there. But advertisers are also sticking to television because I think what they learned with the pandemic was if they cut back on brand advertising, especially on television, when the economy recovered and consumers went ahead and started spending again, they remembered the ads for the products that they saw, and they didn't, and they pulled back on buying products that didn't advertise. And so advertisers have this constant this constant thing going on where they have to pay attention to what consumers are doing, but they also have to be well aware of what consumers will do once the economy recovers.
We had also spoken with the CEO of Pinterest regarding where their business is seeing some either challenges, but also where that's able to grow out because of the advertising base that they still rely on as well right now. I want to play a clip of this and then get your reaction on the other side.
It continues to be choppy out there, but I think I've talked about this on our last couple earnings calls. In each of our last couple earnings calls, I talked about how even in a choppy market, we can still go take share. And I think that's what you've seen in each of our last two quarters, was that we grew faster than the broader market.
So kind of pairing that with what you had said a moment ago, who are the biggest winners where you do see, and as you are seeing that shift from some of the traditional kind of cost per click or digital ad dollars versus the now new streaming opportunities where you've got a kind of Netflix ad-based tier and what have you, where there are eyeballs that they can easily go for there in this kind of broader screen wars, if you want to sub it up that way, quest for advertising dollars?
Yeah, it's actually two separate questions. So the digital players like a Pinterest or a Twitter or guys like that, they will. You're going to see shifts in market share. I think the bigger winners on the digital side are clearly going to be Meta and Google because they do have the broadest reach out of all of these digital operators. You're seeing a lot of experimentation going on with a lot of these, call it smaller or secondary digital platforms. And so money might move around just based off of, things that are going on, like Twitter clearly has had issues recently, and they've lost ad dollars, and they've gone to other platforms, and so you might see market share shift that way. But I do think the biggest winners there are the big global platforms, Meta and Google. On the streaming side, I think the additional inventory actually helps advertisers as well as the media companies, because you're seeing declines in audience share for television. But if those eyeballs are going to streaming services, now a company like like a Disney or a Warner Brothers can go to an advertiser and say, we can offer both television as well as streaming, and you can get a much broader reach. And so I think that benefits those companies.
So as we head into the second quarter, then, what are going to be some of the top 3 trends that you're watching in where ad spending is going?
Well, it's going to be driven by macroeconomic trends. Right? So we're assuming that the second and third quarters are going to be where we could potentially have a recession. So we're going to have to really pay attention to what advertisers or what media companies are telling us. In a way, it's a bit difficult to try to look at the second quarter and try to draw any conclusions, because especially for television, there isn't the big programming, either sports or some kind of event that people are going to watch. And so you're going to see audiences decline in the second quarter. So really what we're going to have to see is what's going to happen in the third quarter when the NFL and the new TV season starts. And we're going to get a bit of a clue from the upfront, which will start to get placed in the second quarter. So maybe the upfront is the thing to pay attention to in the second quarter. But really, it's given that advertising is becoming so close to airtime, it's really what happens during the summer.
All right, maybe just less of the Meta Platforms metaverse ad, which was kind of creepy. S&P Global Ratings U.S. Media and Telecom Senior Director Naveen Sarma. Naveen, thanks so much for the time.
Thank you for having me.